Welcome to Trading Nation. I'm Eric Chemi. Stocks getting hit again on Tuesday. So what are the key levels to watch? Today we've got Matt Maley from Tabak and Michael Bapis with the Bapis Group at HighTower Advisors. Matt, you're looking at key levels in the S&P 500. Walk us through that.
Well, I mean, everybody's been talking about the 200-day moving average, and rightfully so. I mean, we got right down to that level in February and bounced strongly. We got right down to that level on Friday, and it bounced strongly on yesterday. It actually got down to that level back in the summer of last year, and it bounced off that. So that's a key level. But that level is also, which a lot of people don't realize, is also the trend line going back to the 2016 lows. Remember, that was the last correction that took place when oil crashed down into the high 20s. So that's kind of a key line on several different levels. It's not just the 200-day moving average. So, we got to watch that. I mean, a lot of people think that's going to hold in like a rock, but my biggest concern, of course, is that, when we saw the first crack in early February, a lot of people were saying nothing has changed. Well, now I think even back then I thought something had changed because interest rates had moved above their multi-decade trend line. But now we got issues with Facebook, we got worried about trade, all sorts of different things, credit spreads, et cetera. There's things out there that leave a lot of uncertainty in the marketplace. So if we don't hold those levels, it's going to be a real problem.
Michael, that was a lot of information from Matt. How do you digest all that?
Sorry.
No, it's good. I just want to see how Michael digests it all.
Look, I think we're operating in such a short-sighted market right now. I mean, people were asking for a pullback. People were asking for more volatility when the stocks were running so high in the early part of the year. But now that it's here, everyone's getting nervous. Everyone's getting concerned. Contrary to what Matt said, I don't think much has changed. I mean, granted, interest rates have changed a little bit. Facebook has changed. But that may cause a rotation in the markets. Overall, I still think fundamentals are good. The economy's growing. Earnings are growing. And these companies are, for the most part, in good shape. As we saw, many of the companies beat estimates that were raised from the last quarter. So I think it's too concerning that people are so short-sighted. That's my biggest issue that I have with these markets right now. Let's think long-term. Let's go back to the fundamentals that do matter. And let's be careful what we ask for.
I like that last part, but I just want to just end real quickly with Matt. You heard Michael just there mentioning people may think a little bit too short term and that we should try to think a little bit longer term. But when you look at your charts, how much of the chart information gets you into that longer term flow, or is it much more a tool for daily, weekly, monthly type of trends?
Oh, well, when you look at the charts, you can look for several different areas. I mean, everybody talk about charts. I mean, why do people even look at charts? Well, it's because decisions are made on a business basis. I mean, if you're going to add capacity or build a new factory, it's going to take you 6 months to build that factory and get earnings out of it, where the decision is made right away. The investor can say, hey, this is going to come down the road, so I'm going to buy it now. So you can look at it in multi different ways. And I just think one of the things that really has got me concerned, maybe the biggest thing over a longer term basis, is the big change in Federal Reserve liquidity, whether it be, central bank liquidity in general. We're seeing, the QT program, they're going to shrink that balance sheet going forward. And we're hearing a lot of hints that the ECB and the BOJ are going to be pulling back on their liquidity levels too. That's got me concerned. The market, I think, has been driven more by liquidity than people realize over the last 7 or 8 years.
All right, good stuff, Matt. Really appreciate it. Michael, thank you, too, for being here today. And thank you for watching Trading Nation. I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.